Hey everybody, it's Hey John. I cover cryptocurrency videos about Dogecoin specifically. I cover the Dogecoin news and the Dogecoin technical analysis, also known as the sticks. And in today's video, I'll be covering the technical analysis. Today is March 9, 2021. But before we get to all that, do me a huge favor and subscribe, like, and share. Why? So we can grow the Dogecoin community together. Alrighty then, you came for your sticks, let's get to it. So on a daily chart today, the price of currently for the day is currently at about 617 as of this recording. The current stick is looking, I would say, a little bearish, but it's okay though. I mean, you gotta bear in mind that it's hitting a, what it's hitting a resistance for the most part, and it kind of went through it about 643, but the resistance is around a 6.3 here, so it kind of broke through it and is backing down, which is pretty much what I expected. And that's kind of what I've been telling all of you as well, that it'll probably trade range bound for a little bit. And the thing to note here is that we can see the range is at 643 and the low is 605 here. Okay, the previous day on April 7th, there was a, pretty much a giant green candlestick from 586 up to about 623 here. So for that day, it was nonstop buying, just buy. So little miniature steps. The man is walking up the staircase, right? So you're seeing a staircase kind of effect there, which is fantastic. But you gotta keep in mind that won't happen forever. Nothing lasts forever, either going up or down here. So, and as always, we've been trading range bound because this is gonna be a significant, I would say, support and significant resistance. Alrighty then. So we can see also that the current 50 moving average is at about 5536, and the 200-day moving average is a 2261. Both are fantastic because guess what? Both are going up currently. They're both trending up, and all that tells me in the long term, it's a very bullish thing here. So as an investor, I'm not concerned. As a day trader, well, you know what? There'll always be, dip buying opportunities and all that kind of stuff right there. So let's go back into the volume now. So you can see today, as of this recording, there's about 60 million volume here, right? Yesterday was about 62 million, and the previous day was 209 million. So you see the volume dropping off, I would say, off a cliff here. So when that happens, we are most likely going to see consolidation of some sort, because that's the way Dogecoin likes to trade. It has a big pop in volume, and then it consolidates and goes slow for a period of time. How long it takes depends on the next, I would say, news cycle. Dogecoin apparently likes to trade with news. I mean, but you saw yesterday and a few days ago when it popped up, there wasn't really any news though. So it's a little interesting here to see that kind of phenomenon, because that's kind of, I would say, one of the more first times I've seen Dogecoin kind of move up significantly without any kind of news, which is fantastic, which tells me the fundamentals of Dogecoin and all that positive news throughout all the months and weeks, before, are finally coming to fruition, right? That means people are finally, buying it out in a sense where, okay, people are selling and people are buying it, but eventually, people keep on selling here, right? And eventually, hey, you know what? I don't know how you want to sell, because you have a lot of day traders. They want to, they want to sell high and buy low, because they want to start investing some more money into it, and they are trying to maximize and efficiently, their gains. But however, with day trading, there always comes some caveats where when you sell the pops and you buy the dips here, eventually, guess what? You may not be able to buy the dips because a dip will have moved up. And in Dogecoin's case here, it consistently moves up the dips higher and higher and higher. So what I personally like to do is just basically buy on red days and sell on green days if I was day trading. But for me, I like to buy on red days and just hodl and hold, because what that does is think about it this way: when you buy your coins and you hold on to it, right, and you don't sell it, guess what? The float of the or the float or the trading tokens, guess what? They decrease that pool by a little bit. Now enough people do that, the float decreases, so you're able to trade higher with a lower amount of volume needed to move it up or down here. So that's kind of why it's very important that if you're investing, you kind of buy and hold. Your day trading, that's great too, because we need day traders. Day traders help create liquidity in the markets here, so we can buy and sell, with relative ease. So both are needed for the market here. Bears are also needed too, because the bears give bulls such as myself and investors dip buying opportunities here. So I'm all for bears as well. I'm not against them. Everyone's got to eat, right? The bears got to eat, the bulls got to eat. The day traders got to eat. Everyone's got to eat. Robinhood's got to eat by doing the backing clearinghouse fees. So at the end of the day, it's all about money, right? Someone's got to make the money, and how do they make the money? Well, they do it how they need to. And as you can see, as of the day current recording here, we're seeing some it turning green here. However, it's looking a little weak though because we're kind of seeing a pop up and then kind of dip back down, and you see that kind of wick right there. So to me, that isn't necessarily very bullish. What this wick means is basically, basically people bought it up there, and once it got up there to about 643, it got sold off almost immediately. People are saying, you know what, I don't feel comfortable here. I'm gonna start selling now. So people start selling, and that's pretty much why it started coming down. And people buying, well, guess what? There just wasn't enough people buying. So, not necessarily a bad thing, but it is something to note. And check it out as well. We can also see the MACD is still popping up for the most part, right? You see that the 12-day and 26-day moving average is doing this, so they're both trending upwards, which is fantastic, which is what you want to see. And guess what as well? You're seeing there be some, I would say, a little bit of a divergence here on these little red sticks here, right? We're seeing 1, 2, 3, 4 go up, one go down, one go up, one go down. So we're seeing this is what you want to I call consolidation here. But most importantly, it's consolidating in the bull market for the most part, which is a great thing, because on a MACD quadrant, we are up around here, so it's resetting up around here. So guess what? When it resets, when it resets completely on the next cycle, we're going to see a higher low and a higher high, most likely, because this is the daily chart for the most part. However, it depends on how high we go as well, because you can see how in February 9th, the peak was like at 1.6, I'm sorry, 0.0161, and currently we are at about 0.0017. So we're about like a maybe like a 15 times difference. So depending on where this peaks will determine our next higher high and higher low. But I'm more inclined to believe that we will see a higher high and higher low. But of course, it's gonna take time, right? Because one day, on a daily time frame, one day means one stick here. So I suspect we will finish maybe sometime around here. So maybe in 3 weeks' time, we will see how it plays out. So we're gonna need to watch it and just be patient and follow along every day. That's the way it works. And unfortunately, we can't speed up time. So that's kind of why I make these videos daily, so I can keep track of these charts here to show if there's any kind of significant change on the winds. And that's also why I put the news as well on a daily basis, so we can kind of get the news and the technicals together to put together to get a better picture of the fundamentals and how the sticks look, so we can make a better educated guess. Because essentially this is what it is. It's guessing, right? But when you put all the data together, you're making a more educated guess. And obviously, I always say technical analysis is more of an art than a science here. There's no guarantees either which way. Even though it's looking all positive, it can just pull back down and go to heck. And there could be no reason for it, and the reason could appear in a week or two later on. So that's what you call that's what I like to call insider trading. Or or a whale just dumping it and not telling you why. And again, that's also considered insider trading as well. But of course, with cryptocurrencies, it's not really a company per se, so there isn't really, I would say, any insider trading. But when someone wants to, if one of these whales decide to one day just dump it, well, guess what? They're not going to tell you. They're just going to keep on dumping it while you buy it. So I've seen that happen many times in the stock market. So the same games the same games apply to cryptos as well, because they're traded the same way. However, you just won't be as privy to that kind of knowledge because, well, it's a wallet, right? So it's not like you know about this person or anything, so, or persons. But anyway, let's go to a 4-hour chart and see how it looks currently. So the 4-hour chart here is looking quite I would say bullish on a short term, because I drew the cup and handle here maybe I don't know how many days ago, and it's literally kind of following it. And the reason why I didn't delete it was because I kind of want to show the progress of it moving. And obviously when I drew it, I never changed it. But of course, when I draw things like this, it isn't drawn to perfection, right? It's just kind of like an educated guess when you draw it out. And there's never any guarantee that it'll follow the way you want it to follow. But it's fairly close though, and you get a pretty good idea of where it's going. As long as you see the pattern kind of forming the way you want, it doesn't really matter how long it takes to finish up. Could be a few days, a few hours, whatever it may be. Because as always, you know, with trading, history doesn't repeat itself, but it sure rhymes. And you're seeing here, it's not repeating itself, but it sure is rhyming though. And this will not be the first and last time we see a cup handle. We will see more in the future. We will see more bearish patterns in the future as well. But if we continue in this trend here, then to me this actually looks like what I would like to call an ascending triangle. So if we see something, wait, oops, 1 second. Let me make it. Here you go. Let me draw it. So we see something like this, right? And we see something like this here. Well, obviously I'm not drawing it too straight because I'm a mouse, so I don't have the straightest hands here. But you get that idea. We're gonna start trending up here, and eventually, once it gets around here, you follow my cursor, it's either gonna break up or break down. But usually, speaking, ascending triangles are normally bearish. But in this case here, I could see it being bullish for a few reasons. One is because you can see it in the MACD, the 4-hour chart here, right? It's kind of just being a little flat, so that kind of tells me there's some indecision here. But it's having indecision in the bullish quadrant. So to me, this means that, hey, you know what? We have more reason to be bullish than bearish here. So I would expect a pop up rather than a pop down. But of course, as always, things can change, right? Maybe tomorrow something happens and it can change a news cycle just like that. So this is kind of where I'm seeing it going. I can see it pop up and going this direction here. I'll draw real quick like that. But again, we'll have to wait and see. I'm gonna delete this for now because I don't want to make the chart too convoluted so you can't see it at all. All right. So now I'm gonna go to the 15-minute chart and it's kind of going with that because on a 4-hour, oh, I'm sorry, on a one more thing note on a 4-hour chart also is a 50 MA and a 200 MA. They're still diverging some more. So this tells me that in the future we're well, in the near distant future, we're going to start seeing higher pushes as well. So this is another reason why I believe we're going to pop up in the ascending triangle rather than pop down, because there are many factors to put in play here. You got to put all the signals together and kind of see, hey, you know what? It looks more like it's gonna go this way here based on all these other factors here. So you aren't just like, okay, I'm only seeing there's only one signal here, so it's the end all signals. No, it's usually a combination of things, and you kind of put it together and try to figure out where it goes. So again, moving to the 15-minute chart here. 15-minute chart is quite bullish, as you can see. We have a bullish cross here, and most important, the MACD as well. It's also starting to pop up again, and it's crossing into the bullish territory with the bullish cross here. So I suspect by the end of the day, we may close around 6.3 or even above it. So that happens, that'll be fantastic. But keep in mind, today is Friday, and with Fridays and the weekends coming, there may be some dip buying opportunities. But given the way the chart looks, I think this weekend we just may not see that. We just may not see that dip buying opportunity. It may just continue climbing higher, but on a very slow pace here. So, with all that being said, it's Hey John, and do Dogecoin a huge favor by subscribing to my videos, liking my videos, and sharing my videos so we can grow the Dogecoin community together.